Always remember, in good times and bad times alike, this too shall pass away, and your emotions can kill you. You should keep them out of your investment program because impulse is your foe. Well, we've all been favored with the fruition, as it turns out today, of the ancient Chinese curse, "May you live in interesting times." But especially interesting they are, with stocks soaring to unprecedented heights as new forces of technology and globalization can permeate our world. We can't walk away from it, so deal with it we must. On that note, then, let me close with 5 simple principles, a few ideas of what you might want to think about, principles of investing that may help you. First, invest you must. The biggest risk is the long-term risk of not putting your money to work at a generous return, not the short-term, but nonetheless real risk of price volatility. Even though stocks seem very high, consider what I said in my book, a little plug there. Never think you know more than the market does. You're apt to be wrong if you do. Second, give yourself all the time you can. At the extremes, if you're in the 20s, begin to invest in stocks even if you've only got a little bit. If you're in the 60s, invest more in bonds and less in stocks. But always remember that compound interest is a miracle and time is your friend. Third, have rational expectations about future returns and be mentally prepared for market declines. Always remember, in good times and bad times alike, this too shall pass away. I spend a full page in my book on that sage piece of wisdom. If this too shall indeed pass away, and your emotions can kill you, you should keep them out of your investment program because impulse is your foe. Fourth, rely on simplicity. Simplicity above all. There are too many witch doctors in this business with too many. Basic investing is simple. A sensible asset allocation to stocks, bonds, and reserves, a middle-of-the-road selection of diversified funds, a careful balancing of risks and returns, and lest we forget costs, which can kill long-run returns too. Don't disregard low-cost index funds. That's my only plug. Warren Buffett just happens to agree, I'm buttressed by his support, on the importance of cost and on the value of indexing, a nice third-party endorsement, if you will. And fifth and last, when you've followed all of these 4 rules, as I said, and I've meant 1,000 times, if not 10,000 times, no matter what happens, stay the course. Good luck in investing in these interesting times. Thank you.